In the ever-evolving world of cryptocurrency, where innovation and disruption are the norms, most projects flare up with immense hype and vanish just as quickly, leaving behind disillusioned investors and a trail of broken promises. The digital landscape is littered with such fleeting ventures. Yet, amidst this volatile environment, Pi Network has quietly amassed a massive global following, spanning continents and cultures, demonstrating a unique level of organic growth. This growth has occurred far from the glare of mainstream crypto media, operating largely under the radar of industry analysts and commentators. Millions of pioneers have been diligently mining Pi tokens on their phones, engaging with the network on a daily basis. They are drawn by the promise of making crypto accessible to all, regardless of technical expertise or financial resources, fostering a sense of inclusivity. Unlike Bitcoin or Ethereum, which have become synonymous with the complexities of blockchain technology, which require technical know-how, significant investment in expensive hardware, and a deep understanding of cryptographic principles, Pi only needs a smartphone, a device already ubiquitous in modern society. All it takes is a daily tap on a button within the app to contribute to the network and earn Pi. This simple, user-friendly approach has built a user base that is truly remarkable in its scale and diversity. This user base dwarfs many established blockchains, even those with significant market capitalization and widespread recognition. And this is all the more impressive considering that Pi isn't tradable yet, meaning its value is yet to be determined by the open market. For years, Pi's slow, deliberate development, characterized by careful planning and a focus on long-term sustainability, has inspired both hope and skepticism within the crypto community, with some praising its innovative approach and others questioning its ultimate viability. But now, the silence is breaking, and the world is starting to pay attention. Venture capitalists, long uninterested in a project that prioritized accessibility over immediate profitability, are starting to ask questions driven by the sheer scale of Pi's user base and its potential for future growth. They are beginning to analyze Pi's enormous user base and its potential to disrupt existing markets and create new opportunities. Their curiosity signals a shift in perception, a recognition that something significant may be brewing beneath the surface. Pi Network is no longer being ignored, it's becoming a subject of increasing scrutiny and debate. The project is now on the radar of the financial gatekeepers of crypto, the institutions and individuals who shape the industry's narrative. Is Pi a revolutionary movement poised to redefine the landscape of digital finance? Is it ready to onboard the next billion users to the world of cryptocurrency, bridging the gap between the digital economy and the everyday individual? Or is it just a clever system built on hype, with little real value to offer beyond its initial promise of accessibility? As Pi enters a new chapter, transitioning from development to real-world application, its promises will finally be tested, its true potential revealed, and its long-term viability determined. The fate of Pi Network now rests in the hands of the broader market and its most influential players, who will ultimately decide whether it becomes a transformative force or fades into obscurity. Venture capitalists are always on the lookout, constantly hunting for the next big thing, exponential growth and disruptive technology that can reshape industries. They meticulously analyze market trends, scrutinize business models, and assess the potential for massive returns. For years, Pi Network didn't quite fit their established models. It was an anomaly that defied conventional metrics. There was no token price to track, no market capitalization to analyze, and no open mainnet to demonstrate real-world transactional capabilities. Furthermore, there was no clear revenue stream, no immediate path to profitability. In its early days, Pi Network was often dismissed as a mere social experiment, an interesting but ultimately inconsequential project. All the while, VCs were eagerly chasing the shiny objects of the crypto world. DeFi, with its promises of decentralized financial revolution, NFTs, the unique digital assets capturing the attention of collectors and investors alike, and high-speed blockchains boasting faster transaction times and greater scalability. But Pi's user base, now estimated at over 50 million strong and growing daily, has become impossible to ignore, a force that demands attention and serious consideration. In the tech world, users are the ultimate currency, the lifeblood of any successful platform. And Pi offers a ready-made, highly engaged market for decentralized applications, or dApps. While most crypto projects struggle tirelessly to attract even a small fraction of active users, Pi has already solved this critical problem, achieving user acquisition at an unprecedented scale. The conversation in Web3 has fundamentally shifted, moving away from a singular focus on pure technology and towards the crucial need for real-world adoption and practical applications. And Pi's innovative mobile-first approach provides a compelling and accessible answer to this challenge. Venture capitalists now recognize Pi as a potential gateway to achieving mass Web3 adoption, a bridge to bringing blockchain technology to the masses, but only if it can successfully transition its vast community from the initial phase of mining to actively engaging with and utilizing real-world utility applications. These high-level discussions are happening quietly, behind closed doors, as VCs meticulously weigh Pi's immense potential against the inherent risks and the many unanswered questions that still surround the project. The very fact that Pi is even appearing on their radar screens marks a pivotal moment in its journey, a significant turning point. The financial architects who are shaping the next wave of technological innovation are no longer dismissing Pi outright as a fringe project. Instead, they're actively trying to understand the underlying dynamics and determine if this unique, community-driven project could finally deliver on the long-promised potential of mass cryptocurrency adoption. The stakes have never been higher, and the world is watching closely. Pi Network represents an ambitious endeavor, aiming to democratize the world of cryptocurrency mining. It strives to make crypto accessible to everyone, regardless of their technical expertise or access to expensive hardware. The core idea is inclusivity, ensuring that anyone with a smartphone can participate in the digital currency revolution. Founded by Stanford grads, the project brings a level of academic rigor and entrepreneurial spirit to the crypto space. It directly counters the centralization often associated with Bitcoin and other traditional cryptocurrencies, where mining power is concentrated in the hands of a few large players. Pi achieves this by letting anyone with a smartphone participate in the network's consensus mechanism, contributing to its security and growth. Its mission is ambitious: to build not just another cryptocurrency, but a robust and user-friendly cryptocurrency. Furthermore, they aim to create a versatile smart contract platform, empowering developers to build decentralized applications. The goal is to have this entire ecosystem run and governed by everyday people, fostering a truly decentralized and community-driven network. Pi's vision extends far beyond simply creating another digital token. The ultimate aim is to cultivate a thriving digital ecosystem, a comprehensive platform. Within this ecosystem, Pi is intended to be used as a medium of exchange for real-world goods and services, bridging the gap between the digital and physical economies. The network operates using the Stellar Consensus Protocol, a mechanism known for its speed and efficiency. This protocol relies heavily on social trust circles, leveraging existing relationships to secure the network. This approach offers a significant advantage, as it avoids the need for energy-intensive mining processes that are common in other cryptocurrencies. Users actively vouch for each other's trustworthiness, building a web of verified identities. This creates a global trust graph, a decentralized system of reputation that enhances the security and reliability of the network. This trust graph is then used to validate transactions, ensuring that only legitimate activities are processed. The Pi Network app is more than just a wallet. It serves as a central communication hub for the community. It also provides the primary interface for mining, which in reality is more akin to token distribution. This method focuses on wider token distribution rather than the computational puzzle solving of traditional mining. Pi's roadmap involves several key phases, starting with growing the user base to critical mass. This was followed by the launch of a testnet, allowing developers to experiment and refine the network's functionality. Currently, Pi Network operates in an enclosed mainnet phase, a crucial step towards full decentralization. The blockchain itself is indeed live and operational. However, it remains firewalled from external exchanges, creating a controlled environment. This allows the community to actively build and test applications and functionalities. This is all done before fully opening up the network to the wider cryptocurrency market. This deliberate and careful approach is specifically designed. It aims to ensure robust security, adherence to regulatory requirements, and the establishment of real-world utility for the Pi token. All of this is done before Pi officially enters the broader and often volatile cryptocurrency world. Pi's mining model is simple: open the app daily and tap to prove you're an active user. This proof of liveness ensures broad token distribution, not computational power. The mining rate halves as the user base grows, rewarding early adopters and creating scarcity. Users can boost their rate by inviting others or forming trusted security circles. As of July 2025, Pi isn't listed on any exchange and has no official price. Pioneers can't sell or trade Pi for fiat or other crypto, fueling both skepticism and anticipation. The core team insists this enclosed period is vital to build real utility before speculation takes over. Still, a peer-to-peer economy is emerging, with users bartering goods and services for Pi within the community. These informal markets offer a glimpse of Pi's potential value. Ultimately, Pi's worth will depend on the strength of this internal economy and its transition to the open market. Pi's enclosed mainnet is a bold, controversial move. Unlike most projects that rush to exchanges, Pi is building its ecosystem behind a firewall. The goal: foster real utility and prevent speculative chaos before opening to the world. Developers and users can build and transact in a controlled environment, focusing on real use cases. Millions of users are being KYC verified, ensuring a genuine, compliant community. This walled garden allows Pi to test scalability and iron out issues before facing the global market. Critics argue the enclosure creates opacity and delays, with no way for users to liquidate their tokens. The project's success hinges on eventually removing the firewall and launching the open network. The core team has set milestones: mass KYC, mainnet migration, and a mature app ecosystem. Only then will Pi face the true test of open market adoption. VC interest has reignited the debate. Is Pi a breakthrough or just hype? Supporters say Pi has solved crypto's biggest problem, user adoption, by building a massive, engaged community. They see the slow, utility-first approach as a smart way to avoid speculation and build real value. Skeptics point to the lack of a tradable token and question whether Pi's mining is truly decentralized. Critics worry about centralization and the core team's control. Some even call it a data harvesting scheme or a project with no real value. VCs, however, focus on growth and market size, seeing Pi's user base as a powerful asset. Their involvement shifts the conversation from ideology to business potential, weighing community scale against execution risk. The bull case for Pi is all about scale and accessibility. With over 55 million KYC verified users, Pi has achieved what most crypto projects only dream of: mass adoption. Its mobile-first simple design opens crypto to billions who've been left out. If Web3 is to go mainstream, it must be as easy as a social app, and Pi may have cracked that code. By focusing on utility during the enclosed phase, Pi has spurred real-world use cases and hundreds of community-built apps. Supporters believe that when the open network launches, Pi will have a functioning economy, not just a speculative token. The founding team's deliberate pace is seen as careful planning, not incompetence. VCs betting on Pi are investing in a vision of a more equitable digital world, powered by the largest community in blockchain. If successful, Pi could become a foundational layer for the next era of the internet. The opportunity is massive, but so are the risks. Despite the hype, the bear case for Pi is strong. Critics highlight the endless delays and the lack of a tradable token as major red flags. They question whether the core team can or will ever launch a truly open, decentralized network. The mobile mining process is dismissed as mere token distribution, not real network security. Centralized control and the KYC process raise concerns about privacy and data security. Without a listed token, Pi's value is theoretical, based on closed-system bartering. Skeptics fear that once Pi is tradable, a flood of sellers could crash the price. For some, Pi is a well-intentioned experiment. For others, it's a cautionary tale of unfulfilled promises. Pi's future hinges on a few critical milestones, the biggest transitioning from enclosed mainnet to open network. Success here could validate years of waiting. More delays could erode trust for good. The development of real, useful dApps will determine if Pi's economy can thrive beyond speculation. Watch for hackathons, app launches, and transaction volume within the Pi ecosystem. When Pi becomes tradable, its price action will reveal whether the world sees real value or just hype. Early trading patterns will be a verdict on Pi's years of community building. The project has built one of the largest digital communities ever. Now the challenge is turning that social capital into economic value. For the first time, Pi Network is stepping into the spotlight, ready to prove if it's the future of Web3 or a cautionary tale.